Alright, okay, what's up? New episode, how to trade A to Z fucking masterclass. Let's get into this. Um, what I want to cover today is going to be high impact news days and what they mean for us and when we want to stay out of the market and when it is a good time really to use these high impact news events as a catalyst to kind of help us with knowing when the market makers are going to want to place orders in the market and when you should be a little bit more cautious, maybe waiting until the news comes out and then seeing where it goes after that. So um, with anything, this news events or these news events that happen within the market are really a way for manipulation to happen in the markets, really for orders to be filled and then for directions to be like given away. Like when you're watching these news events play out every day and you watch them every single week because they happen so often and you see them playing out within the market, you can start to notice patterns where the market makers will use these events to fill orders, stop people out, and then actually push the market in the direction that they want it to go for the day. And we can show you guys examples of this, hopefully. And I'll kind of just go over the first couple of news events that can be on the calendar. So I want to go over some of the highest impact news events that are on our calendar today. And I'm just going to switch over here to TradingView to show you guys on kind of a white black background. I'm gonna kind of rank them from the most volatile, really normally, to less volatile, but still something we should probably worry about. The first one is going to be CPI, or the Consumer Price Index, and this one is going to be number one. And normally, when it comes out, we have month over month, year over year, and then I think it's like day over day. I don't really know exactly. Let me go back over here. We're going to have month over month, core CPI, month over month, and then year over year. So, and then we have core year over year. So, basically it just looks like this on your calendar when it comes up. That's kind of gonna be the whole gist of that. And then we kind of have trailing behind that, we have the PPI, and we also have NFP. So NFP stands for non-farm payroll, and PPI stands for, I don't know, something price index. Let's go back over here to TradingView and we can kind of see what that, or not TradingView, Forex Factory. What does PPI stand for? The producer price index. Okay, so we have consumer and producer price index. And really, these things are going to be giving us a look at what? The economy. And the economy is kind of what runs trading and what runs stocks and the indexes in these markets. It kind of gives us a good standing of where the economy is and where people's money is going in the current economy. So if people have a lot of extra money and they're investing that and they're putting their money into the markets, they're investing, then the market is obviously going to go higher. And when people are having harder times and people are getting fucked over by the economy, then obviously it's going to be tougher times because the masses are not putting their money into these big stocks and they're not driving the liquidity that these market makers need for their orders to get filled, basically. So these news events can kind of give us somewhat of a range of what the global world is thinking, or what they're thinking and putting their money into at the current moment. So we have consumer price index at the top, producer price index second, and then we have non-farm payroll on third, for their amount of impact that these events normally have on the schedule. I think that CPI and PPI are something that only come out every single month, if I'm not wrong. Yeah, because we have non-farm payroll. It's normally, I think, in the first week of the month. So this month is May, and in the month of May, we had the basically the first week, or maybe the second week. I don't know how they count it, with this being first week. But I think it's like first or second week every month is non-farm payroll gets released on a Friday, and then we have CPI gets released every single month, and then PPI also gets released every single month as well, because they have a month over month and a year over year, which just means that It kind of just updates every month and kind of gives us a whole uh, range of what we are looking for. And when I told you guys at the beginning of the series to bookmark this page, forexfactory.com, and go to the calendar section and make sure that you only have red folder, gray folder, which is non-economic, and the USD selected, and you apply a filter, it's going to show you mostly just these news events. It's going to show you the highest impact news events that you need to be worried about on more of a daily basis. We can go over things like these that aren't necessarily big drivers, but are things that you should probably worry about at some point. But for now, we're kind of looking at the impact that CPI, PPI, and NFP are going to have on the trading that we have for the month. So normally with these things that are the highest volatility, they release an hour before the market opens. So what do we know? We know the market opens at 9:30 a.m. Eastern Standard Time. But if we're looking right here, most of these news events like CPI and PPI that drive the market and that are really high impact are not coming out in the times that we are trading. So it is coming out beforehand. So what do I like to do on these days? On days like CPI and PPI, I like to take a look at what the overall market did. You know, are we taking out draws on liquidity from that specific news event, and is that news event driving the market towards the place that I know that the market will want to go today? And if it's moved a certain amount, or if it's moved so much during that period of time, I will sit there and I will say, you know what, the market has probably already made its move for the day. It's probably going to go into a period of consolidation, and I should probably stay out of this market and not worry about trading it and preserving my capital for good probability days that are not on high impact news days. So whenever these things are on our calendar, we're always making sure that we're weary of them and we're looking, but we are reactive off of these things. We are not taking them just for face value, just saying, oh, CPI came out today, I'm not going to trade. You're going to look at the market, and hopefully over time, you're going to get experience, and you're going to say, uh, this looks okay. It doesn't look like it took out all the draws. It might have a easy retrace just to get up to this draw on liquidity because we're so close to it. So you have to be reactive. You're probably not going to be good at being reactive just first thing off bat. I'm just saying it's probably not going to come to you naturally, but you will see me sometimes trade on days that have high impact news, and I don't really care for it because I know that I've seen the market do this 100,000 times, and I know that we might be able to get up to another draw on liquidity very easily. The fourth and last day that you should probably never be trading, just based off the stats and when I've back tested, I know that these types of days are days that I just need to stay out of the market. I know some people have better luck with trading these days, but the volatility isn't there. I'm not used to these days. I'm not used to them on my strategy. I don't really know how the market moves on these days because the liquidity dries out, and this is going to be any bank holiday. So, as I'm recording this right now, it is actually Memorial Day in the US. I live in Canada, so I don't even know what we're celebrating. I think it's like something for soldiers and whatnot that fought in the war, but we have a different holiday for that, so I'm not sure. I'm not familiar with it, but any bank holidays. So if we look at today, which is Monday, May the 25th, we have a bank holiday today. And we can see this pops up on our calendar. And if I go here, I'm just going to select this box that shows the week that we're currently in. And we can see that we only have one red folder news day on Thursday this week, and it comes out before we trade. So every day this week should be decent, and I will be looking for trades every single day of the week. This is kind of how I map out every single week. I come into it, I click over here on the exact week button that we have on the left-hand side, and it'll highlight which day that we're in, so I know that I can click on this. If this day was highlighted, Monday the 18th, and I'd click this box, and it would show me last week, which we didn't have any news. And sometimes this can be bad. If we have no news, sometimes it can be bad. If we see that there's no news on the docket, there's nothing driving the markets, and there's nothing for the market makers to use to have liquidity for their actual moves for the day. So we saw very choppy price action last week, and we didn't see, very clean deliveries that we normally are used to. And like the previous week, we had CPI, we had PPI, and we had a new Fed chair get voted in, and we had retail sales all before the market opened, and these were driving factors to make sure that the market was in a good spot to deliver to our draws on liquidity. However, this week, bank holiday. If you click down here, it'll tell you more about the holiday. So it'll tell you a description, it'll tell you the effect. We don't really need to know about all this. It can tell you a reason why traders care about this event happening. You can read through it. Okay, that's very cool. We know that we have a history of when all these events have happened beforehand. So we can see all the bank holidays that have happened this year. We saw President's Day earlier this year in Monday, February the 16th. We saw on January 19th, the U.S. Markets will be closed, or banks will be closed because of Martin Luther Jr. King Day. And we're not trading on these days because these days are days that big banks in America are closed. And what do we know? We know that market makers are the people that drive the markets. They have the liquidity to be able to move the markets in ways that they want to. And when these bank holidays happen, nobody's in the office to move the markets. So who is going to be the one moving the markets? It's going to be retail traders or algorithms that are set up to stop traders out and give them fake outs of actual moves that they'd see on regular days. So I will not be participating myself. I know that, my strategy gets cooked on this day, and I can see that setups that would normally play out don't actually play out on days like this, and they actually end up dying out and don't give us the proper delivery that we would be expecting as traders. But we can see all the different bank holidays that have happened this year. Let me go back into March of this week. Is this? No, I'm not in March. I'm in May. Here we go. Okay, boom. We can see bank holidays, days that we probably don't want to be in the markets. Okay, now let's get into. Let me go back to our CPI news data that we had this week or this month happening. If we do look right beside, we have some numbers that show up beside every single news event and every single event happening on our calendar. When we are looking at these news events and they have not happened yet, like if I look at ones that are happening this week instead, I can show you that under this tab, under actual, it shows nothing here, and it won't show anything until the news is actually released. So what happens with these news events is that we get a forecast for what analysts think is actually going to happen with these news events when they get released. So they predict the number of what these news events have are going to have or are going to happen when the news comes out, and then if it's somewhere relatively close to what they forecasted it at, it's not very much expected. It was already expected that this was going to be the entirety of the data, and it's not a surprise. So if experts release that data and it is not different than the forecasted number that we see on Forex Factor, we can normally see sometimes a less reaction than expected because, these numbers were not crazy insane, and the bots that move the market immediately as soon as the news data comes out are not reacting based off of that. So market makers have bots set up, I believe, whenever these news events come out to gauge the number against the forecast, and then it will shoot the market up and down a lot, or it won't react that much if it's close to the forecasted amount. So we have previous numbers that happened on the last core PCE price index, the month over month. We have the number that happened previously, what they forecast it to be. So they forecast it to be the exact same as last time. And then if it comes out that way, it probably won't react in the market that much. And we can see the same thing for over here. We have the previous was at 0.7, and then they're forecasting it to be a lot higher this time at 2%. So what can we see if we go back over here to CPI? We click on one of these events, like CPI year over year, and we bring it down, we can see that the forecast was 3.7% for this particular event, and it was 1 point higher at 3.8% when it actually did come out. So it's green over here on this number because it was more than what they forecasted it at. So it was better than the forecast. If we click down in here and we look at the stats for all these news events here, we are focused on the usual effect for these events. If we read this and we see actual greater than forecast is good for the currency, that means that if this number is higher than this number, the forecasted number, it is good for the currency. It means bullish for the currency. If it said actual less than forecast is good for the currency, that would mean that this number would have to be less than this number for it to go up. It can read different ways. It could say actual greater than forecast is bad for currency. And then that would mean that if this number is greater than this number, then it means bad. It means it's going to go down. It means the market is going to go bearish, so to speak, or so to think. That is kind of the way that you need to be able to read news events, but you also need to know that when these news events come out, it can be the fact that market makers just don't care about these events and they will move the market whichever way they want. If it's a less significant event than CPI, PPI, or NFP. If it's something like CPI, PPI, or NFP, most of the time it does conform to the sentiment of what Forex Factory says over here. However, if we have something like core retail sales, this is something that's not as high effect. It is red folder, but it is not something that is crazy high effect in the market. So it's not going to drive the market crazy. Sometimes we can have good for currency news, and it can come out that the market goes bearish right off that news anyways, or it shoots up and then it instantly starts to go back down afterwards because, it wasn't enough effect to drive the market going crazy up. So we can't just put in all our chips on the table and say, let me gamble my account and say, I think CPI is going to be more this time. Let me put it all on the upside, and then it comes out bullish, and then you wonder why you got stopped out bearish and to the downside, and the market moves down against you. It's like, dude, you can't take the news for face value. You can just take the news and apply it to when you're going to trade, when you're not going to trade. Different times for news events can help you with this. Like if news is coming out at 8:30 a.m., I normally don't even wake up in the morning until 9 a.m. So I'll log on and I'll see what the 8:30 a.m. news did for the day, and I'll go, hey, this didn't affect the market much. I think I'm going to trade today. Or I might log on and I might see, hey, the market just moved 50 to 100 points to the upside off of this news candle. I don't think I'm probably going to trade today. It took out both Asia session and London session highs. So, you know what? I'm staying off the market for today. I'm not gonna participate in this. So you can really gauge your sentiment based off of that. For anything that comes out after that, like if something's coming out at we've had news at 9:40 a.m. There's news that comes out at 9:50 a.m. Or sometimes there's 10 o'clock news in the morning. Normally at these news events, it will be a good idea for you to wait until these news events come out. Or if you're in a trade beforehand, you better pray that the market doesn't stop you out over it and it doesn't use you as liquidity, because I've seen it happen multiple times before where I enter a trade at 9:50 a.m. and then 10 a.m. news comes out and I get cooked on the trade because it was just a liquidity sweep for then the market to move in the actual direction that I wanted it to go in the first place. So anything that is in happening before or after 9 a.m. to 11 a.m. in news is normally times where I'd want to wait until the news comes out to make to take a trade. So anything from 9:30 to 11, you wait for the news really to come out before you take a trade. This is if you're in beginner stages. If you are more advanced, then you can know most of the time where news is going to take us and if it's going to be a massive reaction or not. But for most of the time, you're probably going to want to sit out of these news events and just watch them from the sidelines until you can get a really good grasp on how they affect the market and how they're going to affect your trade that you're in at the current moment. So that's kind of how it is. But if we have something like 8:30 news, we are kind of going to want to look at the news event that happened and then kind of gauge if we're going to trade or not. So let me see which day it was. It was May the 12th, Tuesday, this month that we saw PPI. So May 12th. Let's just keep going back. Okay. May 12th. Let's go to 9:30 a.m. on that day. Okay, we're rewound to this day, and we can see that CPI news data came out on this day, and we can see that when it moved crazy. It moved the market up all the way up to here. It moved 10% to the upside, and then it also moved 0.16% to the downside. But if we see right here, the market was kind of indecision. It kind of swept out these London lows and then gave us opportunity to move to the upside even further and take out these London session highs. And then it kind of put us in a good position for us to look for a trade this kind of day, because it kind of showed its hand. It kind of swept liquidity to the downside and then it moved upwards. So this would probably be a day that I would look to trade. But if we had gotten a candle that closed all the way up here and then it was really, really close to these Asian session highs, and I wasn't able to see a retrace and a push back up here, I probably wouldn't have taken this or sought after it as a good day to take a trade. I would have just said, CPI just came out. Why would I try to take a trade up to here? The market moved so many points to the point where, it wouldn't make sense for me to take another trade and see more and more volatility out of the market to move it higher. So this looked like a decent day. If we see we move actually down a lot lower off this move. So this would have been a play where we take out London session highs and then we get a retrace perfectly right back into this gap right here that we have. And then if we scroll down to the 1 minute time frame, we can see that right after we inverse this gap and take this to the downside, we could have just taken a trade like this, and we could have taken it all the way down to these lows down here. Or, if we have 4 hour or 1 hour lows that we know that we try to get out of a trade by then. So we see we have this 4 hour low down here, and we can see that market does target. And if we were to target that, we would have gotten a 1 to 1. That's pretty decent. So is what it is. I would have taken probably that trade if I could have that day. But, maybe would have gotten stopped out break even depending on where you put your stops at, and if you got scared and then the market came and stopped you back out. But, still a good day where you could have taken a winning trade off of that. So, that's just showing you guys that there is opportunity in these days where we don't see hundreds of points move. But if we go to the next day, I believe, which was PPI day, I can show you guys again what my sentiment would be for where the where would I be taking a trade, or where if I would be taking a trade. So let me move us to Wednesday at 6 a.m. Boom. Okay, just like this. Okay, yeah, we see at 8:30 we get a crazy candle, so we get a 0.20% candle. This day was even more reactionary than what we saw on CPI day, but I'd still probably be looking at the market on this day because we didn't take out any crazy high liquidity draw that would have caused me to say I'm not going to do anything on this day. So we take out Asian session high here. If we come up here and we retrace into this gap, then it might be good to take shorts even further down, because we have more draws on liquidity to the downside down here probably. So we have this draw down here, this 4 hour draw that we put in yesterday, and then if we wanted to go higher, then we'd probably have to target all-time highs or these equal highs right up here to the high upside. So we could go either way. If we flip bullish here, then we can target these highs, or if we stay within this gap, then we can take it lower probably. So what do? We inverse the gap. We still have this one right here, so we could react off of that one. This one's dead. Okay, we're getting reactions to the downside. Maybe enter the trade here. I don't know. Yeah, you could maybe enter here. You might get cooked. But 2.5 RR. Yeah, we get cooked on that one, so that one would have been losing, but you know, uh, still might be able to see something to the upside. We got a push into this gap, so okay, I was a little blind. We got to push back down into this gap here, so we might have just been wanting to go higher in this scenario, anyways. So just didn't see that because I was rushing through the back test so much. Maybe go right here. Target these highs, it would be ambitious, but you know, we'll see. Maybe you break even right here. We break even. See a little bit dead for the price action, but you know, it still seems like we're gonna get there in the end, but now you'd have to see it. We end up smacking it. We do. It's a bit longer of a trade, but you know, still ended up smacking 1 to 3 RR. Boom. See that we have our strategy. We just follow, you know, a retrace into this gap, and then we push up to the upside. What do we also get here? We also got equilibrium getting filled. So boom, perfect equilibrium fill right underneath this midpoint of the gap, and then boom, we just take it up to the upside. So pretty perfect for the entries there. Can't lie, but you know, we get a break of structure to the upside right here on the 5-minute time frame, really. Kind of right here, and then we see a retrace into a gap, and then pushes to the upside to take us higher. So really would have been a decent day for us to take a trade anyways. So maybe I'll pause it right now and I'll find a couple months back where CPI would have been way too much, and I could show you guys kind of a day where you would be looking to stay out of the market at least. All right, okay. If I'm gonna show you guys a example of something that I would probably stay away from, we can come over here to February when we had a CPI news data day on Friday, the February the 13th. Let's go back into TradingView. As you can see, at 8:30 a.m., we open up and we come up and we take out this London session high. And then you can see for the rest of pre-market into 9:30 a.m. for market open, we can see that we just kind of chop around. And then throughout the entirety of New York session, we just get choppy price action delivery. We do end up delivering up to these Asian session highs, but just look at, you know, the expansion moves that we're making. We're not making big moves and then retracing back into gaps. We don't do that until we manipulate up here, and then by that time it's already 1040, and you know, I probably wouldn't be looking for anything after that point. So very sloppy, and you can see how consolidation just starts to form in these types of market conditions when we get huge expansions to the upside. Like literally we got half a percentage point, 0.49% of the move in this singular candle before market even opens. So this would be a day where I'd wake up and I'd say, you know what? Yeah, CPI just happened. We are not interested in trading this. Like literally half a percentage point of a move. The market doesn't move that much, as we can see within just today. The market's moved 1.37%, and the S&P has moved about 1%. So 1 to 2% is normally what the market can achieve in a day. And so if you're looking at the 930 candle and you're seeing, you know, market's already up 0.5%, are we really going to be able to deliver that much higher for the day? You know, maybe we can deliver quite a bit higher, and we can take some draws like this that are pretty easy, but you know, is price action looking the best, and are we willing to trade that? So that would be an example of a time where I would want to stay out of the market, but any of these events. So you're going to want to look for CPI, PPI, and NFP, and those should be events where you are cautious of when you are taking positions. You should be looking at the charts. You know, did we take out major draws on liquidity? Are we getting big reactions off of these candles? Like, did we take out London session high, and are we in consolidation time frame? Everything just needs to be taken into account. So you have to look at the news, see if it's good for currency. The actual greater than forecast is good for currency. As we can see right here, the actual was not actually greater than the forecast. And what do we still have? We still had manipulation to the upside here, and we never saw bearish really until we opened up market and swept out these London session lows and then went higher off of those. So that is a good example of how manipulation can happen with these news events. And hopefully you guys understand a little bit more about news events and how they can affect you. But you really need to be reactionary. I suggest that when we start getting into these back session testing videos that I show you guys, me going over the strat every single day, that you back test on these kind of days and you add these to your journal of is this effective for my strategy? Do I know what this point is going to do, or this point of news is going to do for the markets? Can I be reactionary off of that? So that's basically all you need to be worried about, really. But hopefully you guys understand news events a little bit better, and we'll see you in the next one. Peace.